future of development. And this, therefore, ladies and gentlemen, makes it even more critical for DFIs to play their role in accelerating development in developing countries. And so in this conversation, we're going to be putting the spotlight squarely on how DFIs can be catalysts in mobilizing the much-needed finance that is required to close the financing gaps that will allow us to move towards and achieve the Sustainable Development Goals. But we're also going to be exploring what more can be done to leverage these roles and what more can be done together, what new collaborations may emerge. It gives me great pleasure to welcome my panelists for this conversation who are going to be sharing with us their insights and their experiences. I'm going to start at the very far end on my right-hand side. We're joined by President Nobumitsu Hayashi, is the Deputy Governor of the Japan Bank for International Cooperation. Thank you very much, sir. And right next to him is Sir Suma Chakrabarti, the President of the European Bank for Reconstruction and Development. Welcome. We're joined by Mr. Ambrios Fayol, the Vice President of the European Investment Bank. Welcome, sir. And next to him is Dr. Sidi Ould Tah, the Director General of the Arab Bank for Economic Development in Africa. And of course, right next to me on my hand, requiring no introduction, is Dr. Adeshina, the President of the African Development Bank. Starting closest to me on my left-hand side is Dr. Banda Hajar. He's the President of the Islamic Development Bank. Welcome, sir. And next to him is Madame Cynthia Rusli. She's the Chairwoman of the Indonesia Exim Bank. Welcome, Madame. We are also joined by Mr. Jin Likun. He is the President of the Asian Infrastructure Investment Bank. Mr. Jin, thank you very much. And next to Mr. Jin is Dr. Benedict Oke Orama, the President of the Afri-Exim Bank. Sir, welcome, thank you. And last but certainly not least is Mr. Sergio Pimenta, the Vice President of the Middle East and Africa International Finance Corporation. Welcome, sir. I'm going to kick off the discussion, and I might just jump around a little bit, but you know, President Adeshina, I'm going to start off with you because as I set the context, we set the context about a changing role, not only for DFIs, but multilateral development banks broadly. Given this change that is taking place in the landscape, how is your institution responding to these changes and this new context?
Well, thanks very much. First, let me say I am delighted. You know, I'm very pleased indeed that all the presidents of the multilateral finance institutions are actually here. This is actually a record because we've never had this in Africa. We've never had it all. So it just tells you that we all recognize that Africa is the frontier, and we all recognize that we have to work differently. Yesterday, when we had the opening session, you had all the presidents of the African DFIs that are here. We say we are going to deliver as one together. Today, you have a different context of all the multilateral finance institutions globally, and we are also going to deliver as one in a more powerful way, in a more synergistic way in Africa. And why is this very important? Well, you know, you were just mentioning about the Sustainable Development Goals. If the Sustainable Development Goals do not succeed in Africa, it will not succeed. It will not have succeeded in the world at all. And therefore, making that work is critical. Now, how much is it going to take? It's going to take us about $2.5 trillion to do that. We all know that governments alone can't do that. Private sector alone can't do that. Even all of our own, if we collect all our balance sheet together, won't be able to do that. But we do know that we need to move from billions to trillions, and that we agreed on. And so how do you move from billions to trillions? It means we are collectively going to do three things. Partnerships, like you see us on this stage, is going to be a key component. Working with private sector to leverage private capital is going to be a very key component. And third is the fact that how we also optimize our own balance sheet is going to be very, very critical because we need to improve our own overall capital adequacy and optimize our balance sheet better. And so what you will find as we go through these conversations is really what each one of us is doing around the issue of partnerships, around the issue of private sector development, and around the issue of making sure we optimize our balance sheet. I'll say one thing about the issue of how we optimize our balance sheet. We want to go to trillions. Collectively, as multilateral development banks, we took a decision, I think Suma is about, was it 2 years ago or 3 years ago? We did the Multilateral Development Bank's Exposure Exchange. We, the African Development Bank, were facing a headroom constraint or concentration in one of our regions. And we collectively decided we have to do more, MDB Exposure Exchange. And what that did was very innovative. It freed up $10 billion of headroom lending for the African Development Bank. And that's the kind of thing that we want to do more of. You're going to hear from all of my colleagues. So if there's any message that I want to communicate to you today, it's that look at us on this stage. Our job is to mobilize capital, to do blended finance, to de-risk, to help to manage projects. But for the first time, we are all on this platform called the Africa Investment Forum because we want to mutualize our efforts to bring the capital we need to Africa to advance it. This is very historic, and I'm so delighted and thankful to all the presidents of the banks that are here today.
Thank you very much. Thank you very much, President Adesina. And to that, I'm going to go right to the far end of my right to the Deputy Governor, Hayashi. And one of the things that President Adesina has highlighted is the need to catalyze private sector investment and the role of DFIs in doing that. Perhaps you could just talk to us about how the Japan Bank for International Cooperation is doing this, and what are the big successes that you've been able to clinch thus far?
Well, thank you. Thank you very, very much for your kind introduction. We are not exactly a development finance institution. JBIC is the policy-based financial institution wholly owned by the government of Japan. We support Japanese companies' activities overseas, thereby contributing to the world economic development and better welfare. Now, long before the advent of the Belt and Road Initiative, many Japanese companies have been established their businesses in Asia, and JBIC has supported them, focusing on aid to investment, on increased connectivity, and on partnership with international organizations. First, Japan's ODA has largely been directed toward Asia, but as countries in the region grows, we are expected to play a growing role in assisting private investment, especially by manufacturing companies in Asia. Well, this resonates exactly with the idea behind this forum, from aid to investment, and that's why I'm here. And I happen to believe in manufacturing, how it creates quality workforce. But just setting up free economic zones or industrial parks are not enough. Japanese worldly renowned companies, as well as Japanese SMEs, conduct sustained improvement of their production process through Kaizen, which leads to transfer of technologies and know-how, human development, thereby contributing to inclusive growth. Solid value chains have been established in Asia, which invite further investment in such chains and beyond. And I do not think it is too much a challenge to establish industrial clusters or value chains in Africa, where there is so much young labor, untapped, untrained, but aspiring. And secondly, not only do we support individual investment of this or that company, we strive to achieve regional economic development by increasing connectivity. We supported infrastructure development, for example, in Laos, hydroelectric power project, whose electricity generated will not only enrich the people of Laos, but also be supplied in Thailand, where many Japanese companies, auto companies are. Such infrastructure improves investment climate and actually induces more investment. Therefore, the challenge in Asia is such positive feedback creates constant infrastructure deficits. And then in Africa again, where we increasingly find more economic growth in non-oil and gas sectors, priority should be given to infrastructure that enhances connectivity and induces further investment. And JBIC wants to contribute such regional integration. And thirdly, We cooperate in co-finance with MDBs and our fellow ECAs, export credit agencies, to mitigate risks and crowd in and leverage private investment. We support a couple of geothermal projects in Indonesia with Asian Development Bank to de-risk the project. And also in Africa, with the leadership of President Adesina, we co-finance Nakala Corridor Railway and Port project, which enriches the host country's treasuries, as well as enhances connectivity in this part of the continent. We have an MOU with EIB, and look forward to working with you, my friend, Mr. Fayo. And does Japan compete with China? Well, you bet. But on the contrary, JBIC has just signed an MOU with Chinese Development Bank to cooperate in third countries where both our companies are involved. The know-how of such agencies and the experience of Japan and JBIC combined should bear many a successful return, I believe. Thank you.
Thank you very much. Thank you very much to the Deputy Governor. Lots of initiatives and partnerships, MOUs that are already underway, partnerships that are already existing even on this stage. Thank you very much for that. But let me come to you, Sir Chakrabarti, because one of the things that President Adesina has been speaking about is how do we move from billions to trillions? And of course, he's speaking about the financing gap that exists. So how do we ensure that we can crowd in the additional finance that we need? Talk to us a little bit about what the European Bank for Reconstruction and Development is doing in order to take advantage of the financing gap that currently exists on the continent.
Thank you very much. First of all, can I say hearty, hearty congratulations to Akin, my brother, and to the African Development Bank, and to all the African members here, and to the Republic of South Africa for this wonderful event. This is a first. Akin, let's not make it a last. It's been such a wonderful thing to do. So a quick word on the European Bank for Reconstruction and Development. The first thing is we're a global shareholding bank. So next door to me, my friend Ambroise will tell you about the EU Bank, which is the EIB. People often get confused, so I want to start with that. And our mandate is essentially about private sector development. We started off in Eastern Europe particularly, but we also are in Central Asia and in Turkey, and now more recently in North Africa too, which is actually the fastest growing part of our portfolio, in Morocco, Tunisia, Egypt, Jordan and Lebanon as well. Now, what do we do? Well, quite clearly, given the private sector basis of our bank, we lend mostly to the private sector, direct. So in each year, somewhere between 70 and 80% of our lending goes direct to the private sector, not through governments, but direct. And even when we're working with governments, say, for example, at municipal level, what are we trying to do? We're trying to move those municipalities to a more commercialized approach, potentially, trying to actually work with utilities to get them to function better at municipal level and improve their public services too. So the private sector mindset is the number one thing you've got to have to move from billions to trillions, I think. Secondly, you really have to put, you have to really go the extra mile, I think, in terms of thinking about your instruments. Hayashi mentioned this as well. Let me just outline what I mean. You probably all remember the famous phrase of Henry Ford, you can have any color you want as long as it's black. That is not the right way to approach the private sector. The private sector needs deals to be structured in a way that suits the project at hand. So what we have learned over the years is to be quite flexible in structuring our deals. We offer debt finance, long-term loans, shorter-term loans. We offer equity as well, where that's required. We offer trade facilitation as well, and we also offer technical assistance. And each project is unique, tailored to suit the private sector need of that project. That's very important to have that tailored, innovative financing. Secondly, it isn't just about the lending instrument. It's also about advisory services. Very important, particularly at the SME level, where we operate quite as well, to help SMEs understand the opportunities that are there. Advisory services are very, very important too. Thirdly, I think all of us would agree that one of the biggest services we can offer the private sector is actually to be their voice, quite often, with government. What is it that the private sector needs? Investors like you, what do you need to see in terms of the investment climate, in terms of the policies that would make you want to invest in a particular country. We use all our learning at sector level to offer that to governments and try and help them improve their investment climates. And the final part of this is really interesting as well, is this partnership between us and other entities here. So we work closely with the EIB, work closely with the African Development Bank, with AIB, for example, an Islamic Development Bank as well now, increasingly too, and with the IFC as well. We have not just co-financing, but we often work on some policy issues together, some big issues around pricing, due diligence, how can we streamline our processes. These are all things we try to do. Why? Because in the end, we want to offer a better product to the private sector investors out there. So that's where we are at the moment. I think 3 final points I'll make in my time. One is, I have learned over the years how important it is for us to develop not just the foreign investors, but to develop the local investors too. So really understanding the local markets is fundamentally important. So our matrix approach has country officers really quite at the center of this, along with sector teams as well. But we also try to provide a lot of financing in local currency. Some 30% of our debt financing deals last year were in local currency. I think it's the highest number for any multilateral. It's very, very important. We try to develop local capital markets with others here as well. Secondly, we developed these risk mitigation instruments, as Hayashi-san mentioned. We do a lot of that too, with MIGA in our case particularly. And the third, and I think big area, is not just finance. If you want to move from billions to trillions, the private sector, if they're going to finance something, they need to see the projects, a good project come to them. A lot of projects fail to make it because they're badly put together. Project preparation is fundamental. So all of us now have project preparation facilities to try and improve project preparation.
Thank you very much. Some really strong points coming through, but one of the things that really stands out is that you're challenging the essence of collaboration for us to think about it as more than just co-financing and really begin to work on broader issues. I mean, you give the example of working on policies, on due diligence, but also taking on the responsibility of being the voice of the private sector in engagement, and hopefully we'll get to explore that. Now, one of the things I did notice, Vice President Fayol, is that Sir Chakrabarti really didn't want to be confused with you at all. So what I'm going to do is I'm going to come to this side of the panel just to make sure we don't have the confusion. Then I'll come back to you after a while.
Apologies.
Okay. So let me go to, of course, Vice President Pimenta, right at the end, the Middle East and Africa, the IFC in particular. Now, VP, when one goes to your website, one of the statements on the website says, no institution can solve the challenges of development on its own. How has the IFC lived up to this mission statement?
Thank you very much. And it's a pleasure and an honor to be here in this very distinguished panel. And I'm glad you went to our website, and I'm glad that you picked that sentence, because it's actually a very important statement in terms of partnerships. IFC is the private sector arm of the World Bank Group, so all we do is finance private sector and advise private sector. And as this institution, I mean, we're actually the largest multilateral financing in developing world, focusing only on private sector. But we know very well that given the size of the challenges that we have to confront, we will not succeed alone. So we need partnerships. We need to work with others, and I'm very glad to say that we work with all the institutions in this panel. We work very closely, of course, with the African Development Bank in this continent, and having a lot of successes because we work together. And why it is important to work together? Because, one, we all have the same objectives in terms of development. And to reach these objectives, it's important to provide the best options, the best solutions possible. And every institution has its own capacity, its own knowledge, its own experience, and bringing that experience to the table, comparing with others, being able to say, look, we've tried this in this country and it didn't work, or it did work, and we can replicate it and do it somewhere else. We can learn from each other. So that's very important. It's also important that we agree on the standards and on the improvements that we want to bring to the economies. As you know, it's for institutions like ours, it's extremely important to promote development following good environmental and social standards, governance standards, and being able to compare notes, being able to say this is how we do it, this is a very important part. On the IFC side, I have to add that we really try to, I mean, we've always tried to catalyze private sector in emerging markets. That's been our mandate from the beginning. But over the last few years, we've really pushed our strategy to the next level by promoting an approach where we work much more with also our colleagues on the public side. And within the World Bank group, of course, the World Bank is the player who does interventions with the public side. And so we work much more with the World Bank on working with the governments on saying how can we open up more opportunities for private sector and having what we call creating new markets, opening new doors, new opportunities. And that is a very important part because we all see, and you said it at the beginning, development will come from development support and not from aid, right? So that means private sector will play a much bigger role. And private sector, when we look at Africa, particularly in the more difficult markets, we say, how come private sector is not operating that much? I mean, we look, for instance, on the infrastructure space. If you look at the size of the infrastructure market in sub-Saharan Africa that is occupied by the private sector today, it's very small compared with the size of the overall infrastructure market, and even more smaller when we look at the needs that are needed, right? So in order to be able to bring more private sector, we need to open up that space, and we need to have governments engage in reforms, engage in opening up opportunities, doing more private-public partnerships. And this is one of the areas that IFC, together with the World Bank, and then with all the partners in this panel, have been working on creating these opportunities. And then we provide advice, we provide financing that allows us to do that. And then the second and last point I would like to make in terms of what we can do in this space, we also realize that, in particular in the more difficult markets, the risk, whether real, whether perceived, is still very high. And this is one of the reasons also why private sector gets nervous to go into some of these markets in a large way. Both domestic private sector investing their own money in their own country, but also foreign private sector coming in. And in order to do that, in order to help address this problem, what we've been doing is developing products of what we call de-risking products. So products where we are introducing elements, for instance, we've got a private sector window with money from AIDA, which is the window of the World Bank that is for the poorest countries, where we have AIDA money coming in and blending it with commercial funding so that we can then go and take on more risks in the more difficult markets. This type of approaches allows for a bigger space for private sector and therefore getting more impact and having the result that we all want, which is the countries in Africa develop, create jobs, create employment, create opportunities, create activity for the populations of Africa.
By extension, if we speak just about the risk that you speak about, and we know that if we share risk a bit more, it reduces the burden of risk that each institution carries. Are you also, by extension, saying that if we collaborate and partner, we actually create even bigger space for private sector funding to come in because we share the risk even more and decrease the burden for each individual institution? Very briefly, please, Mr. Pimenta.
No, very briefly, I would say absolutely. and a little bit longer than that, I would say yes, in the sense that we have agreements with most of the institutions around the table where we work together. I think it was mentioned by some of the previous panelists in terms of one of us does due diligence on behalf of the others, and then we can share the risk. And that it's not only sharing the risk, but it's also sharing the knowledge. Each institution can bring its own contribution to a transaction when it's like that.
The absolute value of being able to compare notes and compare insights. So we've moved from our starting point, which was saying that the future is definitely not about aid. The future is definitely based on development. But I think we could also conclude, Dr. Orama, that the future is also based on trade. And this is where I'd like to bring in Afrexim Bank. And again, going onto your website, very clearly says that Afrexim Bank wants to be the trade finance bank for Africa. Why is it important for you to partner alongside other development finance institutions to be able to live up to that aspiration of being the trade financing institution or bank of the continent?
Thank you very much, and I'd like to thank our brother President Adesina again for the opportunity. We are the Exim Bank for the continent. Our focus is on trade. But trade is critical for investment promotion because if a producer has no market, that producer will not produce. Investments would not come. Jobs would not come. So trade is very, very important. And Africa's trade has been facing very, very strong headwinds in many ways. We've seen the de-risking of many international commercial banks because of high compliance costs, which have made it very difficult for many countries to have access to trade financing, LC confirmation. So in this area, we've taken a bold step in the spirit of being that trade finance bank for Africa. We decided that we would provide the trade services facilities for 550 banks by 2021. We've onboarded 300. By 2021, we expect that we will provide $8 billion to African banks to enable them confirm letters of credit and make necessary payments. That $8 billion should be done so that every country will at least have one bank that has such a facility. We are doing that. Intra-African trade for us is the arrowhead for driving Africa's trade and Africa's development. So we have created a division called the Intra-African Trade Initiative, which is promoting our agenda towards driving intra-African trade. Under that, we have a number of facilities, including intra-African investments, intra-African trade financing facility, intra-African letter of credit facility, which we hope will help us drive that trade. We are committing $25 billion in a revolving manner by 2021, from last year to 2021, to enable us achieve that. We're also going digital, using technology to promote what we are doing. We are developing the Pan-African payment or clearing and settlement platform. The idea here is to use it to reduce the foreign currency content of intra-African trade, to make it possible for Africans to trade more using their local currency. That platform should be ready by the first quarter. And going further, given all the investments that are required, we are doing a lot of things differently. We are sharing risks with our African partners. The African Development Bank has been extremely helpful, participating in our risk. We also are working very closely with banks like TDB, the Africa Trade Insurance Agency, and others. But in the spirit of looking inwards, we also decided that we will raise most of our liabilities from Africa. We gave ourselves a target of raising $10 billion within 5 years, starting from January last year. Surprisingly, within 1 year, we raised $5.7 billion from the continent. Sure. That has encouraged us that we could raise much more if we work harder to do that. And we also know that capital is a challenge. If we want to meet all the needs, or most of the needs we've committed to meeting, we have to have the capital to do so. So we decided that we will have to create a source of permanent capital. And just last year, we listed depository receipts on the stock exchange of Mauritius. This listing will help us to continue to raise capital when we need them. I think when we look at all this, the collaboration they bring and the capacity they give us, we think that the future is bright for the continent in terms of trade. Thank you.
The future is bright for the continent when we look at trade. Thank you very much for that. And I'm going to come to President Jin. next, sir. And again, I want us to go back to what sits at the core of this conversation, which oftentimes is shaped in the context of a challenge, Africa's financing gap, but we're soon realizing is also an immense and massive opportunity. What is the Asian Infrastructure Investment Bank doing to tap into the opportunity of the financing gap that exists on the continent?
Thank you very much. Thank you. And this is the first time Asian Infrastructure Investment Bank has been invited to an African forum. I'd like to thank President Atsina for your support. Let me inform you that we now have 12 members of African countries, and the 4 members who have completed a ratification, who are ready to borrow from us, are Egypt, Ethiopia, Madagascar, Sudan. And actually, we have already invested in Egypt. Kenya and South Africa would ratify their Articles of Agreement very soon. And the new members, Algeria, Ghana, Libya, Togo, have already sent applications received. And we have Morocco, Cote d'Ivoire, who would be interested in joining the bank. So at least I can say we will have 12 members. I hope next time I come here, it will be double or even triple. So I can work with the African Development Bank and some other kind of multilateral institutions, including my friend over here. So you see, when the bank was conceptualized, it was never, ever defined to be a bank for Asia alone. We believe in today's world, connectivity across all the continents is important, physical, non-physical, and we don't think Asia, no matter how fast it has been growing, can sustain itself without close economic, trade, financial relationship with Africa, with South America, with Europe. So we made a point, this bank should invest in Asia and beyond. So people tell me, why did you change the title of the bank? I said, no need. Asia Infrastructure Investment Bank means Africa, Asia, America. So it covers everything. And also, we are very much happy to work with all of the major multilateral institutions. We think multilateralism is important. I attended this opening ceremony. I'm very much impressed by the determination of African countries. Development is, first of all, the ownership of your own country, your own people, your own government. Nobody can replace it, but we can give you a helping hand. That, I think, is a plus. So, given China's appearance, development is always your own efforts. Yeah. And we believe that African countries are fired with the inspiration and energy to ramp up efforts to do everything on your own. But we can be of some help by working together. And I think we help mobilizing private sector resources for many African countries by working together, as the EBRD's President Soma Chakrabarti said. By working together, we could have a better dialogue with the governments of the country, even though we finance purely private sector operation. Give you one example. For instance, in my previous capacity in Asia Development Bank, we financed a project, a private sector project in a post-conflict country. The project was doing wonderfully well in spite of the risks, some people were very much concerned about. But after the project was implemented, it became such a smashing success. And all of a sudden, some government officials wanted to nationalize the project. And we immediately intervened. We said, your people are driving away the capital flow in at the very time you desperately need it. You are literally kill the golden eggs, the golden goose that lays the golden eggs. And then the government finally called off this kind of nationalization. So we should understand private capital is timid out of its comfort zone. The comfort zone is predictable policies, regulations. The private capital could be very timid, very scrupulous, but if you can assure them that you are working in a country in an environment which can guarantee you the safety and security of your resources, they will be happy to stay here. And they can also attract more capital into your country. And this is the contribution by the MDBs, multilateral development banks. So we contribute not only in financing, but to stabilize the macro policies and regulatory policies. Thank you very much.
Thank you very much for a fiery contribution. And a big question, I think, that you've left the private sector representatives in the room with. And the challenge is private sector capital is using President Jin's word, timid. How do we make private sector capital more brave? And I think that is the question and the challenge that you're throwing back to the audience. Vice President Foyol, is it safe? Can I come back to this side? We've created enough space between a buffer between the two. So, Vice President Foyol, the European Investment Bank, which is different from the European Bank for Reconstruction and Development. Talk us through about the vision for the IEB, and in particular, where partnerships fit into the vision of the IEB, and how you've been able to express and manifest that vision.
Okay. Good afternoon. Many thanks to Akin and AIF Debate for the invitation. It's really a great event, and very pleased to be here. So, as Suma has said, EIB is a bit different from EBRD. We are the Bank of the European Union. Our shareholders are the member states of the European Union. We have been created 60 years ago, and we are active both within and outside the European Union to finance investment, mostly within the European Union, I have to say. But we do every year around 7 to 8 billion euros outside of the EU. And what we do is very wide. We are doing investment with sovereigns, in particular, actually in this case, I would say investments that attracts investments. We are, for example, financing projects that are enabling in the energy sector or in the connectivity sector. In the private sector, we are pretty active, from microfinance to private equity to the more classical loan or subordinated loans. We are also very active in various sectors related to the life of the private sector in Africa. We are doing, to your question, we are also doing, like EBRD, local currency. And I know this is an important issue in Africa. To your question about partnership, of course, we have very strong partnerships with other institutions for one reason, which is we never finance more than 50% of a project. So to some extent, partnership is in our DNA. And the partners are, many of them around the table. AFDB, a big one in Africa. IFC, a big one in Africa also. We financed recently a big project for a cement factory in Nigeria, for example. We have also with African Bank, we've done a lot of things. We are active with the IAB outside of Africa for the time being. And that's something that we think is key if we want to use what we can do, which is to bring leverage. So to go from billions to trillions, as Akin said. Now, one final remark on my side. We see that more and more the challenges and the questions that we face are not necessarily specific to Africa. They are more global. What we have seen, and we need to find a way to finance them with a specific focus on Africa. Last month at the annual meetings of the World Bank and the IMF, we've launched with KfW and AFD, because we work a lot with bilateral development agencies. They are not here, but EDFIs are clearly very strong partners. An initiative called the Clean Ocean Initiative. If we don't act now, by 2050, there will be more plastic than fishes in the oceans. Sure. And this initiative is a big one. It's 2 billion euros. Investment in collecting, recycling the plastic that is in the sea. So it's also circular economy. There is a big part of that will be earmarked to Africa, because, of course, the African coasts are also very much interested in it. And a good part of that will be also in making sure that we increase the technical capacity to recycle, to do with waste management, etc. We do that in particular with GIZ, the German cooperation entity that is helping in this. And I think this is very important, that we try to achieve together impact on these kind of sectors.
Thank you very much for that contribution. And I think the statement that you make is quite alarming, that we're looking at a future where there might be more plastic than fish in the sea, which is quite a big statement to make. Allow me to come to Dr. Tar for the next question, sir. You know, as we are speaking about the emerging opportunities that are coming out of the financing gap in Africa, one would also assume that that also to some extent triggers some sort of institutional reorganization that has to take place even within your own institution, to make sure that you have the capability, the appetite, the energy to make the most of these opportunities. Talk to us a little bit about what the Arab Bank for Economic Development in Africa, some of your own institutional changes that you've had to undergo to make sure that you are ready to respond to the financing gap in Africa.
Thank you. 1 year ago, when I was President Adesina and I were signing an agreement between BADEA and African Development Bank to renew the long-lasting cooperation between the two institutions and to help to achieve the high five, President Adesina mentioned to me that he had this idea of launching an African Investment Forum with an innovative vision. And I thought it will be a new forum with some innovative features, but I didn't expect it to be the one we are saying today. Really, we are all impressed, but the capacity of the African Development Bank under the leadership of President Adesina and the support of the government of South Africa, and I recognize our big sister, Madame Zuma, she was very instrumental in organizing this forum. So a big applause for her. Today, we have 10 multilateral development institutions and many development regional institutions. We have ministers, we have private sector, we have civil society. So it's really a unique opportunity for Africa to start a new journey. The Arab Bank for Economic Development in Africa, BADEA in short, for those who don't know the bank, is a multilateral development institution owned by 18 Arab countries. And as you know, in Africa, family matters. And we do believe that BADEA is a member of the extended African family. Why? Because 3 out of 5 Arabs are African. And 1 out of 5 African is Arab. And the bank and the BADEA has been established to be totally dedicated to supporting African economies. So our first mandate is to foster economic development in Africa, but our second mandate is for me today more important, which is encouraging investment flows from Arab world to Africa. And this forum offers us an excellent opportunity to achieve our mandate. And thank you again, President Adesina, for giving us this opportunity. We are a multilateral development institution in a changing world. This is why we are in the process of changing ourselves. So we started the preparation of what we call Badia 2030. What is Badia 2030 all about? It is about aligning our vision to the Agenda Africa 2063, aligning our objectives to the SDGs 2030. We have already started a series of workshops with all our stakeholders, and we do believe that our niche should be to focus on supporting African private sector, and I'm very happy to see the strong presence of African private sector in this room. So supporting African private sector to reap the benefit of the fourth industrial revolution. To support African farmers to develop value chain and to create jobs for youth and women in Africa. To work with all the multilateral development bank and regional development bank to contribute to bridging the infrastructure gap. And of course, to continue our mission in supporting social sector, education, and health. So basically, these are our priorities, and we are very happy to be part of this gathering and also to do more together.
Thank you very much. In Africa, family matters. Thank you very much for reminding us that. So I'm going to come back to this side of the room, and I'm going to go to Madame Rusli, chairwoman of the Indonesia Exim Bank. And I think the question that I'd like to bring to you builds on the answers that we got from Vice President Pimenta of the IFC, where he spoke about the importance of being able to compare notes. The question for you is, in which ways is the Indonesia Exim Bank leveraging its knowledge and its networks from other banks to meet its mandate and to deliver on its mandate?
Okay, thank you. First of all, I would like to thank the African Development Bank for extending the invitations to the Indonesia Exim Bank. So it's really, truly an honor for me to be here in the very distinguished speakers in this panel, and also joining the event. It is very, very fantastic, and I really enjoy it and learning a lot from all the speakers and the sessions, which run very, very smoothly and very well managed by the African Development Banks and all these supporting institutions. So again, congratulations for the event. I think for those of you who have not been exposed to Indonesia, because we are quite far away from Africa, who happen not to be knowing so much about Indonesia. Indonesia is the fourth largest, most populous country, and we are, in the terms of the landmass, we are the 15th largest country in the world with 260 million people, and with the GDP of more than $1 trillion US dollars. And now, I think Indonesia is also a member of G20 countries, and the government now is really keen to optimize the spirit of Asia-African conference back then in 1955. So the pushing towards South-South cooperations between Indonesia and Africa is really a priority of our current government. And that's why the government also set aside a certain capital through Indonesia Exim Bank to be managed to support the economic relationship, improve also the trade and investment economic relationship between Indonesia and the African countries. So on that base, I think the Indonesia Exim Bank, on behalf of the government of Indonesia, would like really to show to African counterparts here in this forum that it is really a sincere interest and genuine, you know, effort from Indonesian government to work together with all the private sectors, the government, as well as the multilaterals, you know, which is also have interest in the African continent. And back to your questions, I think before that, Indonesia Exim Bank is a special institution under the law, which having a mandate to provide lending, the financing, guarantees, insurance, as well as advisory services to not only the Indonesian exporters, Indonesian business players, but also our counterparties, you know, in the foreign market, in the target markets. So with that, of course, when we execute the mandate with the trade and investment, we will talk about all the knowledge of the parties that involve in the trade, in the transactions. Then it needs the knowledge about each others. So the data, the information sharing is something that needs to be exposed to everybody who involves in the whole value chain. That's why I think with the collaborations, the networks between the development finance institutions, bilateral institutions, as well as the financial institution is very key to have successful transactions and can have achieved the objective of having the transactions, or whether it's investment and trading between the two countries. So with that, I think Indonesia Exim Bank, you know, we have exposed with some of the institutions and the multilateral development agencies here. We have with the IFC, of course, with the Global Trade Finance Program, with the ICAC, Islamic Development Bank, ITFC, with African Exim Bank. In fact, we have also exchange program with the African Exim Bank. We send several of our teams to to Cairo, and with JBIC, with Korea Exim Bank, China Exim Bank. We also have a global network of Exim Bank, which includes also, it's not only Asia, Africa, but also Latin America. So we have set up a platform to work together, knowing and realizing that with the global open market nowadays, so everybody needs to have a collaborative platform, synergy, and exchange the information and exchange the knowledge and learn from each other. And also, I think we need to mention about the standards of documentations of process, yeah, of the deal structures that we need to also build together. So I think that's you know, the platform that we need to work together between all the institutions that
Thank you very much. Yeah. Thank you very much for that. So it's not just about creating the space to share ideas, but how do we, in sharing those ideas, begin to share standards and uplift standards across the board, and really ensure that the experience of dealing with you know, development finance institutions globally then becomes, or even on the continent, becomes almost comparable. Before I come back to Dr. Adesina, I want to come to you, Dr. Haja. Again, the conversation has really been around what are the tangible and concrete ways that the banks are using or the DFIs are using to crowd in private sector capital. So maybe let's just focus quickly on the Islamic Development Bank and some of the very practical ways that you are creating the space for private sector to come in and play.
Thank you. Now the world is entering a new era and this era is marked by global challenges, and these challenges is beyond any individual institution to address it. This is why the Islamic Development Bank adapting a new developing or business model, shifting the bank from bank of development to the bank of developers. Developers, all the people are sitting here in the panels are developers. All of you here are developers because all of you have a role in the development process. So the bank, its role here is how to bring all those developers together in a value chain approach and identify the role of each developers or partners in the development process. And to emphasize on the partnership and the importance of partnership, I created in the bank a complex. I call it Partnership Development Complex, and I appointed a vice president to manage this complex because and the mandate of this complex is going to be to expand the existing partnership and deepen the partnership. Also, we are shifting the bank from the on-balance sheet funding provider to market creator, to investment facilitators, to development enabler. And this paradigm shift, in fact, it is important to make the market work for development. This is very, very, very important, how to make the market work for development. Now we move, what is the Islamic Bank doing in this? First of all, we are now in the process of establishing a fund, infrastructure fund for Africa. We call it the African Impact Infrastructure Fund with the private sector. Second, we are also in the process of creating a fund for preparing facility fund to help in, especially in the BP project, to undertake feasibility study and provide advisory services and to ensure the quality of projects and bankable projects. Also, we created the Science and Technology and Innovation Fund with $500 million, this to provide seed money to startups and small and medium enterprises. And on the 10th of December, we are all invited to the first summit in science and technology and innovation in Cambridge in the United Kingdom. Also, we initiated just during the annual meetings of the bank in Tunisia, the regional rice value chain development program. And this program will benefit 10 African countries in sub-Sahara. And this why it is rice? Because about 40 countries in Africa out of 54 countries grow rice. And about 35 million people generate their income from these sectors. And about 6% the demand for rice in this continent. And we expect, and we are going to create a value chain for these 10 countries, and we are financing this project with $175 million, and it is a concessional finance. And here it is very important to focus here on the creating bold fund with blended financing. And here also we are not talking just about private sector. It is important to talk about philanthropies and about the NGOs and others, because the private development assistance is estimated about $44.6 billion just from 24 countries. And here we created life and livelihood funds with many countries, including Bill and Melinda Gates Foundation. The Islamic Development Bank provide the finance, and also the other philanthropists, they provide the cost for the finance. So the finance will look like it is a concessional finance. In fact, also, it is important to mention that we started and focusing on promoting the competitiveness of the economy of our member countries. In this regard, it is important to focus on the comparative advantage of each countries in each sectors, product, services. And then we focus on these sectors which country has a comparative advantage, and then we design the value chain that bring all the partner with us in this value chain approach. This is what really Islamic Development Bank is focusing in a very short,
Thank you very much. So much richness in your response and examples, that take us beyond the scope of the conversation and touching on philanthropy and in particular also just reminding us that we have to make sure that the market works for development, and that's often an element of the conversation that we forget. In this next round of questions, I'm going to ask everyone to be very brief. Amongst their questions is probably, how do I take advantage of the products and of the approach and of the mandate of the various banks represented on stage? So let's go to your institution first. How do we take advantage? What is there ripe for tapping into that investors can tap into as of today?
Well, I think what we're trying to do is really talk about what people can tap into collectively for us. First and foremost, we have to make sure that we have standard templates in which when folks are actually applying for us for financing, it's a standard template. Transaction costs, we've got to cut that down. So that's first thing that I would say. Secondly is access to project preparation facilities. It's not lack of money, it's getting bankable projects. We have a number of project preparation facilities that we need to also scale up significantly so that we can tap into that. I think that's important. The third thing that I want to say is that as we have all these conversations, we should not forget that capital is now moving into a lot of the low-income and fragile states. And I think that we need to find a way in which we do risk investments in those particular areas. For us as a bank, after we've made all of our allocations to our reserves, 75% of our risk capital goes into financing fragile states and low-income countries. And those countries need to expand their fiscal space, so we have to invest in them. Lastly, what I will say is that we have to innovate. Those days are over in which we just be banks that are known for just pushing money. We have to be financial catalysts. Yeah. We have to really be that. And to do that, the bank in July, for us, I like to call it the Innovation Month for us as the bank, because our board approved 2 things that we did innovations globally. First is the Multilateral Development Bank's first synthetic securitization model, where we were able to take the risk off our books, and we took the credit risk and gave it to the private sector. $1 billion was a global benchmark thing, and we all know that we have to do more on that. The other thing we are doing to stretch more money so that we can lend to more people is that we're actually insuring a lot of our own books right now. We did a $500 million insurance for our own portfolio, which is going to free up about $1.2 billion for us. I think that is very important to do. And finally, let me say that at the end of the day, since I probably had my time, all of us here, Suma over there, the president of the European Bank for Reconstruction and Development, has been the chairperson of all of us, the Multilateral Development Bank. He passes on the baton to me to be the chair of all the multilateral finance institutions starting from January. What I want to tell you is that we will come back to a lot of private sector folks about how do we harmonize better? Yeah. How do we cut down your transaction costs? How do we make sure you can apply to us and speed up a lot of the things that we do? This is going to be on the radar screen of what we do. And I think it's a collective engagement that we are all making.
Thank you very much for that, President Adesina. And I want to pick up on one of your points, and I'm going to bring it to you, Mr. Pimento. One of the points is very boldly going into low-income and fragile states. And I know that this has been a focus for the IFC in different parts of the continent and different parts of the world for some time now. If you could reinforce and enhance some of the thinking behind the rationale of going collectively into some of these fragile markets and some of these really low-income markets, and almost do a rallying call for that kind of intervention. How would you reinforce what we've heard from President Adesina?
Thank you very much. I fully agree with you. These are the biggest challenges for all of us, not just for us in the panel, but for all of us in the room. These are the countries where the populations need the more help, the most support, And the models of traditional aid need to be replaced by the models of development. And you can see a lot of successes in middle-income countries. You see a lot of success in other countries. How do we replicate that in the most difficult countries? One of the biggest challenges you have also is a very booming demographics in those countries. So how do you create employment for the youth, for the women in those countries? In terms of reinforce what Dr. Adesina was saying, in terms of what we can do, first, it's introducing elements of de-risking projects. Second is really working on the business environment, improving the conditions of business so that we can all be more present. Third, and we launched this project during our annual meetings last month, is focus on human capital, focus on health, on education, on bringing the population to the level where they can contribute to the economic activities. And fourth and last, which is a very important point for this continent, in particular in the most difficult countries, is we need to make sure that Africa embraces the digital economy, and that not just the larger countries, but every country in this continent has access to broadband. We had the governors of the World Bank during the annual meetings, and President Kim had that discussion with them, and they agreed that the ambition that we all should have is to double broadband access by 2021 in Africa, and it is possible, and that will make a big difference.
Thank you very much. Yes, definitely. A round of applause. Thank you very much. There is another point, and I want to bring this to President Jin. President Adesina speaks about harmonizing better, working together more effectively. And I'd like to get your thoughts on, we have a great showcase in this very moment of partnerships that are working. But could we do even better within those partnerships? And if we could, what would need to be true? What would be required of each of our institutions to think about, to do, to embrace for our partnerships to have an even greater impact than they have right now?
Thank you very much. I would like to echo President Adesina's point. The multilateral development institutions should be innovative. We should be creative. And indeed, it doesn't make any sense for this AIIB to be created if it's just a clone of the existing institutions, no matter how wonderfully they have contributed to development. Our bank was set up in the 21st century with the 21st century governance. So we remain in the MDB family. Our gene pool, we still remain the gene pool of the multilateral development institutions. What are they? They are the shareholders of the sovereign governments. And we are benefited from the taxpayers' money. And we support infrastructure development and other productive sectors through our direct investment and the leveraging of the private sector resources. So a lot of things we are doing are a common denominator. But to be creative is really, really important because we have to be responsive to the member countries. We have to be fast. I don't think it's tolerable for us to see a project would be protracted, be prepared and be done for 5, 6, even 10 years' time. This is not the way things should be done. So I think we should work together and compare notes to see how we can work together more efficiently, cost-effectively. For instance, if we are cost-effective, our clients are also cost-effective. We should not create hidden costs by all those kind of, excessive conditionality. We observe high standards, environmental protection, protecting of the people, but that does not mean you should be bureaucratic. That does not mean you should do something which would actually cost the people you intend to help a lot. So we are all, I think, on the same page to be more creative. It's very important for the board, who are represented by government officials, to think about the way how they can think outside the box. A lot of people say we are thinking outside the box when they are right inside the box. Okay, and everybody loves nice words, creation, innovation, but when it comes to creation, They just abhor something. Why? This is not something MDBs do, right? We have never done this. So I think it's very much important to understand. It does not help if the mindset of the board or the management is hardwired to the practice, which has been there for the last half century, 7 decades. So we need the support of the shareholders, stakeholders. We must be allowed to try, even though we made a little bit mistakes. Yeah. So what? You know, but if we keep clean, we don't put the money in the wrong place for the management of the resources. If we do something not so good, we can try, but allow us to try, and if we don't think it's good, we can try a different approach. I think, we discussed this with our heads of the MDBs. We all agree it's so important for us to try to do something which has never, ever been tried before. And I'm sure, given our new approach, we could be achieving the objective. But finally, let me say, our mandate is to improve the connectivity. Okay, our mandate is to promote broad-based economic social development through investment in infrastructure and other productive sectors. We don't think only infrastructure is important. Other productive sectors are also important. And some people ask me, what do you mean by other productive sectors? I said, other productive sectors means other productive sectors. We want to help African countries to move on the value chain, to help you develop your manufacturing capacity, your mining capacity by a better standard, so that you will not be locked up in a traditional trading pattern. You only export raw material. You import and manufactures. That's not tolerable. That's why the MDBs should be thinking big, should be creative, and help you. And I think it will change. I will say one day African countries say proudly, we export high-value, high-tech goods to Asia, to America, to other parts of the world. And I think this is going to happen.
Thank you very much. Again, another fiery contribution. Thank you very much. Vice President Fayo, I want to come to you with the next question. Part of what we've just heard from President Jin speaks to the question of agility and being able to take opportunities in a relatively emerging space, an unknown space, to be bold enough, to be brave enough, to try things that have not been tried before. And we know that the EIB has been bold. We know that there's been the Africa Capitalization Fund that you've been a part of many years ago already. But I'd love for you to respond to what you've just heard in the context of how do we make sure that as we try new things, we can still do it together? Because one would argue that it's easier to try on your own, because if you fail, the failure is isolated to that just one institution. And if we try together, perhaps we become a little bit more timid. How do we make sure that that is not descriptive of the representation that we see on stage today?
Well, first, I think that what Akin and President Jin have said is extremely important. We need to be innovative. We need to make sure that we continue our traditional activity, but we need to be innovative and we need to be cost-effective and etc. What I think is the point that I would add to what has been said, because I'm not going to repeat, I think we can play a role in creating markets.
Creating markets.
And let me give you an example. We all talk a lot about green bonds. And green bonds, the way to finance climate change projects in the world. The problem is that climate change problems are global, and green bonds are mostly in advanced economies. What we have, actually, it's an asset manager in Europe, which is called Amundi, has launched a fund with IFC, with EBRD, with ourselves, which is going to say, okay, let's try to get financial institutions in advanced and developing countries issue this kind of bonds we will buy them.
Right.
So that we can try to launch a market that will then develop itself. And I think that's one of the things that the public institutions that we are can help with, is create this kind of enabling environment for this big challenge like climate change.
Thank you very much. And I think it's a fantastic insight, and I want to bring it to you, Dr. Tab, because what I'm hearing from Vice President Fayol is that, yes, it's okay to create the space for private sector funding to come in, but also there is the potential to create completely new markets that might not have been there by leveraging the financing instruments that make that possible. And I'd like you to bring that into the context of the markets where you operate in, and does this sound that like the creation of new markets is something that DFIs should be taking on far more aggressively than they have, and not necessarily just looking at deepening opportunities in existing markets?
Definitely, DFIs have the responsibility today to work on de-risking the new markets. And as mentioned by President Adesina, it is our responsibility to make deals happen. And that can only be done with innovative tools which will help the private sector to overcome the perceived risk in this market. Because the risk is all about perception. And today, most of African markets are perceived as a risky market. So the role of DFIs is to go through an innovative approach to come up with instruments which will help to de-risk the transaction. And I do believe that we are witnessing, yes, we witnessed yesterday and we are witnessing today in the boardroom a beginning of that exercise by bringing all the stakeholders together and by discussing with the policy makers, the business community, the DFIs, the private sector, the commercial banks. So we have the opportunity to come up with innovative solutions to overcome the risk and to make deals happen. I do believe that this is the most important thing. Now, at the level of DFIs, there is already a coordination among the MDBs. There is a coordination among the Arab Coordination Group, the Islamic Development Bank, Badia, and others. But what we need today is a chart for working together for all the institutions, not only MDBs, but also DFIs at the regional level, and even commercial banks, to work together and to work hand in hand with the policymakers to get the conducive and enabling business environment needed by the private sector.
The point around working together with policymakers, Sir Chakrabarti, I'm going to bring that to you. But before I do that, because I think you spoke about the potential of collaborating more around even policy formulation, and I'll come to that. Before I do that, I do want to come to Dr. Orama, and I want to bring to you, sir, some of the points that have been raised. One of them is this digital contribution that Dr. Jin spoke about, that we need to be more brave about going digital. And if we begin to think about some of the innovations that we need to see in the trade space, we know that we definitely need more technology, we need to go digital, we need to go paperless in a lot of the trade mechanisms that we have on the continent. Maybe just talk to us a little bit more around what effective collaboration amongst DFIs in the trade space might look like for the continent, especially given that we still know that intra-Africa trade still leaves a lot to be desired.
Yeah, thank you very much. Our colleagues talked about creating markets. Information is critical in creating markets. And one of the disadvantages Africa faces today is lack of information. A buyer in Ghana does not know what a producer in Togo produces. We have so many instances where markets and trades are diverted just because of lack of information. Africa has 55 countries, highly balkanized, different systems, different laws, and so on and so forth. So when any investor, any trader wants to deal with Africa, is faced with, I don't know what is happening here, what is happening there. So information, trade information is very important. It's trade information that would make Africa to transform and evolve into one market. It is trade information that will make it possible for us to realize the objectives of the Continental Free Trade Area, the Africa Continental Free Trade Area. And we recognize that, and we have decided to do two things, to use technology to drive the provision of this information. A few months ago, we launched the Africa Customer Due Diligence Repository Platform, what we call the MANSA platform. This platform provides information on SMEs, banks, and all those who are dealing, who are African businesses dealing in Africa. So anybody who wants to deal with any business can go there and get some due diligence information, KYC information, and so on. In December, we are launching a trade portal. That trade portal will provide information on each and every African country, on different things that are produced, who are producing them, where they are produced, and how they are traded. Accompanying that will be a regulatory portal, because 55 countries, different regulations, people don't know what's going on. So there, if you want to deal with country A, you go there, you will see what the regulation is. If you want to import or export something to that country, you will know what the customs procedures are. You will know how those goods are traded. You will know what the standards are, and so on and so forth. So that's what we do. We're launching that in December. In addition to the payment and the settlement platform I mentioned. So we're looking at technology to drive the future, because we know that Africa is a very youthful continent. We are going to have about 68% of our continent below 30 years by 2030. So that's a youthful population. So technology will be the key thing. And collaboration is critical in doing all this. Working with all our colleagues to support what we are doing, and also making sure that those who will be using these platforms also see them as good instruments for getting the kind of information and also populating the information required. We see data as the new commodity class that would drive development in the future. Thank you.
Data is our new commodity class that will drive development into the future. Thank you very much for that. Sir Chakrabarti, I want to come to the question of collaborating around policy. I mean, I loved one of your earlier comments. You spoke about DFIs having to also own the responsibility of potentially being the voice of the private sector in discussions and dialogue with other stakeholders like the public sector. I'm keen to understand, what policies do you believe or could actually make working together even easier? If we had these policies formulated and implemented in the way that they are envisioned, they would make DFIs going in together, partnering in different markets together, far easier. What are those levers that you would like to see come through?
Well, fundamentally, it comes down to, as Ambroise was saying, about creating effective markets. So if that's the objective, you then have an equation which is there a demand from, let's say, the host government for creating an effective market? Do they have an understanding and analysis of what's missing in their country? So the doing business survey, for example, from the World Bank is very useful in that regard, I think, and we all use it. We do business enterprise surveys with the World Bank as well, and we use those. So we already collaborate on a number of these things. But then it's the supply side from us, as DFIs, partnering. And here, a fundamental thing that sometimes shareholders forget, as my good friend Lee Chun-jin is saying, is actually we are complements, not substitutes, quite often. Right. We've got different business models, we have different things to offer. And sometimes we can collaborate. So I'll give you an example from out of this region. IFC and EBRD collaborated on helping the Kazakh government on the PPP law to make it easier to have PPPs in that country, because that's our area of expertise. But another example would be collaboration with the IMF, which is quite clearly the IMF leads on macroeconomic policy. EBRD does not. But macroeconomic policy and IMF programs do affect the investment climate. So in Egypt, in the Egyptian IMF program, it's been very efficient to actually use that program together with the support of the Egyptian government to have conditions which are around policy reforms to make it easier to invest, for example, in energy efficiency and in the energy pricing area as well. That is the sort of complementarity working together, not behind the backs of governments. You should never do that. Yeah. They must own this program, but working with them if there's demand for that sort of change. That's the sort of working together. I'll give you an example with the African Development Bank. We would not have been so successful in North Africa, 8 billion euros of investment in 6 years from a standing start, if it hadn't been for the partnership of working with the African Development Bank. They actually helped invite us in the first place. Akin's people have led very much. We've been able to leverage their country knowledge with our private sector expertise. Right. That's the way it should work.
Fantastic. I think a great response. We are complementary to each other, not necessarily substitutes of each other. And I think a key highlight of the conversation. Madame Rusli, I'd like to come to you with the next question. And to build on this idea that we are complementary to each other and not substitutes of each other, I'd like for you to please briefly just talk to us about what are the comparative advantages of your institution in certain African countries in catalyzing the private sector? So could you give us some practical, tangible examples where you've leveraged your own comparative advantage in African markets, and you could say this is where the Indonesia Exim Bank has a particular strength and could be actually extrapolated to other markets as well?
So first, I think Indonesia Exim Bank has started this for the last 1 year, as mandated by the government to get into this market. So we have started also to push this year in April, together with Ministry of Foreign Affairs and Ministry of Trade, to promote the Indonesia-Africa Forum in Bali, April this year. So that's one event that we do together with the government. And second, I think what are the comparative advantage, not only from Indonesia Exim Bank perspective, but from Indonesia perspective. I think hearing all of the presentations these 2 days, the challenge in African countries in terms of financing gaps, in terms of infrastructure, in terms of agriculture and sectors, I think that Indonesia has similar challenge to that perspective as well. So with that context, we believe that Indonesia could add value to several African markets. It's not only on building the institutional reform, the infrastructure that I think we can say that Indonesia for the last 4 years, we've quite successful in building our infrastructure sectors. We are quite successful also in doing the institutional reform within the government. We are also quite good in having a prudent fiscal management. We have a successful tax amnesty. So in that context, I think Indonesia could share some of the experience to certain African countries. And our government is really, really open to that. And that also can be translated into a micro engagement between Exim banks in some of the institutions that we have been engaged so far. So that's the first. So I can say that from the macro perspective into the micro perspective, we are able to extend a comparative advantage. The Indonesia Exim Bank can also extend the cooperations not only on the economic, on the investment, on the trade, but also on the capacity building, on the sharing the knowledge. So that's first. And then when we talk about the investment and the trade, I think we have engaged with several countries. We are quite confident in also bringing in the construction services that we've been experienced for the last few years, and we've been exposed to several counterparts in African countries. And also aircraft industry, transportations with the railway, carriages, locomotives, and signaling and everything. So we have also done this with several South Asian countries, and we would like to get this also with some deals in Africa. And in terms of mining as well, we've also supported one transactions in Nigeria with a tin smelter, with supporting our state-owned enterprises and together working with the local counterparts in Nigeria. So we have a few pipelines. I think now we are also discussing with the Africa Exim Bank in some other potentials pipelines that we are structuring in who's helping the project preparations, the pipeline development, the PDF, the project development facilities, and who's helping on the structuring, the co-financing or co-guarantee. So I think with that perspective, as we, Indonesia and African countries has not so much gap in terms of stages of development, so we may feel that we understand, better compared to some developed countries into the African situation. So with that perspective, we are confident that we can have a comparative advantage compared to some other institutions.
Thank you very much. A long shopping list, a big menu of what's available. Thank you for that. I'd like to go back to Deputy Governor Hayashi right at the end and I want to circle back to a comment you made around investing in manufacturing and being very deliberate about investing in manufacturing. And we know that the manufacturing sector in many African markets, and I speak as a South African now, even in South Africa, could do with more private sector funding coming in. Just for a moment, talk to us a little bit more around that very deliberateness and the thinking behind the manufacturing sector, and what do you think could be achieved with a collaborative effort of DFIs in manufacturing across the continent?
Well, the important thing when we cooperate with multilateral institutions is in the infrastructure and also increasing connectivity. These are the two areas. But you also need technical assistance. As I said, just building infrastructure, just building free economic zone doesn't create viable industrial production. You need to have well-trained human resources at the same time with the infrastructure. And these are the kind of thing that we would like to turn on multinational institutions to give technical assistance. And if there is such playground for infrastructure as well as human development, many manufacturing companies will come in, including the Japanese. And as we move more into this world of a lot of more risks, we, JBIC as an institution, would like to take more risks through proper risk sharing among stakeholders, and we want to do more equity investment while playing our traditional role as long-term lender. And the important thing I also want to say on quality infrastructure is that infrastructure is the quality infrastructure that Japan has stood for. That is the infrastructure using the best technologies, best experiences, and do it in an affordable and a sustainable manner, but at the same time reduce the lifetime cost. I talked about the MOU we signed with the Chinese Development Bank, and in that memorandum we are to stick to such principles as openness, transparency, rule-based, economic viability, and financial soundness. When there's so much skepticism or hostility towards globalization, I want to demonstrate that global standards do pay off to the citizens of the host countries and also to the taxpayers of the lending countries. Yeah, and I also want to say the final thing is about environment. When there's so much investment by manufacturing and infrastructure, there's also have to be good consideration about the planet that we share. The president of the largest economy on our planet may not agree with you or with us, but we have to stop further environment destruction or climate change.
Yeah.
We have to agree to make our great planet green again.
Yeah.
JBIC has introduced a new facility this summer to utilize our technology that we hardly struggled to learn through our own economic development, but our own environmental destruction, air and water pollution. So JBIC wants to do more projects fighting greenhouse gas and renewable energy and electricity in energy efficiency, but also in a wider range of areas of air and pollution, clean city, and green mobility, and that with fellow institutions on the stage. So I would like those in the audience also to support and give advice to us. Thank you.
Thank you very much. Let's not forget the planet and not forget humanity, because everything that we do has to ensure that there is a humanity and there is a planet for that humanity to thrive on in the future. I'm going to take one more question, and then I'm going to come back to President Adesina just to give us a final reflection, and then we'll have come to the end of our session. And Dr. Haji, I want to bring this final question to you. You know, in your earlier response, you shared so much in that short space of time, but I think you touched on something that I think we should explore a little bit more, and this is the idea that we need to be deliberate about collaborating across value chains and not just at the first stage of development. Talk us through a little bit about what you're envisioning as you're talking about collaboration that touches every link of the value chain.
Thank you. But first, allow me just to make comment or intervention on the digital economy, that connecting now economies to the global digital economies could generate as much as $4 trillion in GDP for the world poorest population and create 64 million new jobs and improving the lives of 580 million people who are now currently live on less than $4 per day. So I think in this area we need really to cooperate and collaborate to help our member countries, especially if we know that here just in Africa we have about 26 countries are classified as least developed countries. So I think going and connecting these economies of these countries to the global digital economy is very important in this respect. With regard to the global value chain and how it is important in the development, in fact, this is a holistic and integrated solution for development. We are now adapting a new model. When we first of all, we identify the comparative advantage of each country. For example, 5 sectors, 4 sectors, and or product or services, and we make a comprehensive studies on these sectors, and then we draw and design a value chain, and we identify in this value chain each partner and player what is his role in this in this value chain. And the role of the Islamic Development Bank is to catalyze and bring all those developers together to make the impact. If we connect the economy of any country to the global value chain, that means this economy is going to be able to create more jobs, and the growth of the economy is going to be high. And this is the only way to make an impact. President Jin, he mentioned that now we are just exporting raw materials. Not just exporting raw materials and exporting jobs with the raw materials to the industrial countries. And at the same time, we are suffering here from a high unemployment rate and rise in immigration. So here, if we draw the value chain for industry, we will go to the process of manufacturing and export manufactured product rather than just exporting raw materials. This is, if we talk about for example, oil-producing countries, or in Africa, we are talking about all the countries who are exporting raw materials.
Thank you very much. Global value chains and collaborating across the chain. President Adesina, we've heard a lot from this panel. The insights have been very rich and very insightful. And I guess the final closing question, as you give us your final reflections, is, are you confident that we can do even more together?
I'm absolutely confident that we can. I think we need to be bold, we need to be innovative, and we need to be cooperative. Let me say in 4 major areas that are very important. First is on the issue of how we de-risk projects. For us at the African Development Bank, we focus on a number of transformative projects. You have, for example, the Lake Turkana project, which we have there. It's the largest wind power plant in Africa. You have the new Uzazate project in Morocco, which is the world's largest solar power plant. These are the kind of transformative things that we can do. But together, we have to tackle some big things. And for me in Africa, when it comes to energy, the biggest thing is, what do we do with the big INGA? INGA is 40,000 megawatts. And I'm sure that with all of us around here, if we segment out the project risk, market risk, financial risk, and the political risk, we can actually tackle that and make it work. So that, for me, I think is why we need to really work hard on this co-guarantee platform that we talk about. We signed an MOU during this with a number of other institutions. I think we all have to come together and essentially try to mutualize our co-guarantee facilities so we can do transformative things. The second thing is that we all know that the MDBs, we have to reform. And we know, you are our chairman in Bali when the Thurman report was given about what we need to do. But what we need to do is, we know that we need $2.5 trillion to deal with SDGs, right? But we're not scared of those numbers, because the global assets under management, pension fund and sovereign wealth funds, is $56 trillion. Right? So what's $56 trillion if you're dealing with $2.5 trillion? The key really for us is how we leverage those monies, and we leverage them into infrastructure, agriculture, as the President Islamic Development Bank has said, water, sanitation, real estate, all the things that we need. But I must say that 2 things are critical for us to succeed in that. First is we must have infrastructure as an asset class that these pension funds and sovereign wealth funds can invest in. Second is that when we actually make loans, all of us, corporate loans that have to do with infrastructure, for example, we have to stop looking at it in which a corporate loan is looked at in which it's a horizontal risk profile. No, it's a U-shaped thing in which in the early phase you may find higher risk. We can bear those risks in the early phase. Africa 50, all of us can actually develop those things. And then in the later phase, when the returns are more stable, then you can have the pension funds and sovereign wealth funds come in, and they can take a relay on that. So we absolutely have to innovate ourselves and see how we do that. The third thing I want to say is we need to help countries to negotiate better when it comes to transactions and deals. And we have something that we have at the bank that's called the Africa Legal Support Facility that we use actually to help Guinea Bissau to renegotiate its debt obligations to China down by 94%. And so we must avoid a situation where, especially for natural resource-rich countries, are not able to negotiate. So they may have the resources, but they may be negotiating away their resources because of asymmetry, negotiating power. So it's one of the things that we all have to do collectively. And the last point that I want to make is I want to follow up on what President of Islamic Development Bank said. He's absolutely correct. What are those things that we will do in Africa collectively that will change the face of this continent? And I will be talking to my colleagues over the next several months. First of all is that we say infrastructure, infrastructure, infrastructure. But let's not forget that most of the infrastructure that we are talking about is concentrated in the urban areas. We're leaving out most of the rural areas. We can't be having flyovers over rural areas. We've got to really relook at our model. What are we going to do for them? And we, from the bank side, we said we need to have what we call staple crop processing zones, vast areas that we go into, just like you have, President Asia Infrastructure Investment Bank, where we create these new zones with power, water, roads, infrastructure, ICT infrastructure, and create new zones of economic prosperity that we can transform agriculture. We can actually allow Africa to process everything it produces in the rural zone instead of actually moving raw materials out all the time. You create jobs, you have regional value chains, global value chains, you transform everything. So I think that's the power of this group, that we can do something structural that will allow our economies to be more balanced, that can create jobs, and also create equity, especially for those in the rural areas. I just want to thank all of the presidents of the multilateral finance institutions that are here. They are doing a fantastic job, each one of them. I am really thankful that we are all on the same platform here. In fact, we are going to be on little stools that I was telling Suma that are different from this, but I was warned that if anybody fell off the stools, that there's no way we can de-risk a president of multilateral finance institutions falling off stools. Well, thank you all for coming. Your partnership, your collaboration is fantastic. Let's be bold, let's be innovative, and let's cooperate better.
Ladies and gentlemen, a warm round of applause. And that concludes this session. Thank you so much for honoring us with your presence. I'm going to invite my panelists just to front of stage so that we can have a photo opportunity. And ladies and gentlemen, we'll remind you that the boardroom sessions continue. So please consult your program and you may please head on to those sessions. Thank you so much.